following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Almost everything is more complicated than it seems, but almost nothing is hopeless. That's for sure, folks. Not even close. Remember, everything's right inside you. You want something? Use that mind of yours. It's a beautiful thing. It's the messaging unit, folks, of the universe. Market-wise, let's take a look at it out here. Dow Industrial's up 164, NASDAQ up 38, S&P's up 19.5, gold contract flat at $1,257 an ounce. Silver up 21 cents at $16.19 an ounce. Now, silver, wide price spread, accelerated volume, got over the $16.17 area, had the wide price spread yesterday, today. Bottom line, silver is going to make that run. We'll see how it handles now, the $16.50 area. Get over $16.50, $18 is game ASAP. Platinum, $999.50. It hit the $1,000 out here today, finally, up at $9.70, trading at $9.99. Copper caught a nice bid, up 6 pennies at $2.14 a pound. Light sweet crude, that was the number, folks. Light sweet crude took off topside, takes the market with it, up $1.62, $41.99, has the wide price spread, has the accelerated volume, going after the swing point of 42.49. I expect what you're going to see out here, more than likely we're going to go after that tomorrow. And what's so cool tomorrow, folks, Wednesday at 10:30, the oil supply numbers come out. So volatility, yes, in spades. The way it's set up right now, it looks like it wants to blow it away. The notes, the 10-year note down 14 ticks, 130.18. The 30-year bond off 26 ticks, 165.09. Both the note and the bond can't handle the February 1st downdraft. The February 1st downdraft, that's where they came down with volume. They did it once again today. They stayed over it about 24 to 36 hours in the last week. Each and every time they were over it, came back underneath it, went over it, back underneath it. This is the first day that you came back underneath it, and you had the expansion of volume. What does that say? That says to me that this market still wants higher price, and the sell-off inside the bonds really have to do with the market wanting higher price, and they're just shifting the bread right there. King dollar. King dollar still has no traction. King dollar was up a couple hundred ticks today, didn't have the volume. Finished up 63 ticks. We're at 94 even on the dollar index. That dollar index, it's confirmed ABC down. What a confirmed ABC down or up means, folks, is that doesn't mean it's going to get there. What it means is that it broke a B point with volume, and so your probability gets higher that an A to B will equal a C to D. The ABC structure on the way down for King Dollar is $92.30, and we also have that high volume swing low from August 24th at 92.50. So I suspect that's where we're going to go. The real cool thing, and we'll go through this, is that is the dollar index going to break that area and be at 88? And if that's what happens, folks, you think these commodities have run, they're going to run beyond belief. And there's no doubt the metals have run in an extraordinary way. The metal equities have, and the small oil equities have, and the big oil equities have. They're all been doing, percentage-wise, a monster run here in the last 6 to 10 weeks. The euro, Euro down 20 ticks at 113, and the yen is trading at 108.52. Our phone number is 877-927-6648. We go take a look at the SPY. What you're going to have is this. Now, what are you doing with the SPY? Guess what? We're pushing into the highs of this consolidation with volume. That's telling me the SPY is going to probably break out tomorrow. We've been, if you go back to the 29th of March, we had 92 million shares traded. That's when the SPY went from 202 to 205. Well, we did 110 million today. You look at these other highs, it was 86 million, it was 63 million. This baby wants to basically bust topside. Now, if that's what we do, you're going to, let me just do it this way. So if I go to 197, so check this out. If that's what we do when we break it with volume, you can make a case that this is an ABC up to, this will really blow some minds, to 113. A 213. My take right now is that, you get this ABC structure up to 211. But if you break topside, 213, and now this is what's really sick, $213.78 is the high of the S&Ps, of the SPY, which is just a mind blower. If we go over to the cash S&P, what you have is this. Your cash S&P, that ABC structure is 2087.50. You're at 2061 right now. We're up $19 today. We bring this back to the all-time highs, though. The May high is 2134. NDX 100. What do you have the NDX 100? The 3 Qs. 3 Qs, same type of setup, folks. The 3 Qs are weaker than the SPY, that's for sure. We'll see how they handle the 110.40 area. Right now, a rejected 108 out here today. You're at 109.51, and I suspect that's going to run into the $111 to $113 area. Gold, the gold contract out here, had nice volume in it today. We did 152,000 contracts. You've got a flat market. We traded from a price point of 1253 to 1264. And you're into the highs. The high, the closing high, by the way, let me just see this. Closing, was that closing? 1271 looks like, yeah, 1271 thus far has been the closing high. That closing high was generated on the March 4th. The actual high that we're dealing with, the spike high, is 1287. And the bottom of that is 1250. My take is that we're going to go after that. We'll see whether we blow it away. The XAU, the HUI, they both have moved, and they moved with volume. The XAU is up $1.28 today. You're trading at $79.91. And you talk about volume and an expansion of volume, folks, you had it all. On Monday, we did, on the XAU, Monday we did 48 million shares. Yesterday, you did 55 million shares. So you're moving to higher price. You have the juice behind the move. We go take a look at the HUI, the Gold Bugs Index. We set this one up, what you had on Monday. Monday, we went higher with 30 million shares. Yesterday, we went higher with 35 million shares. Bottom line, same type of setup, is that you're moving higher with wide price spread and accelerated volume. The bond market, what do we have at the 10-year note? 10-year note out here today does 957,000 contracts on the way down, and that's after trying to make a high out here with the first day was 1 million contracts. Then it tested it with 780,000, tested it with 800,000. Now it's coming off that with volume. I expect you're going to get a little bit more volume tomorrow. And what is it all about, folks? It's all about King Dollar. King Dollar just can't handle higher price, and lower price is coming at us. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Now, don't forget, folks, every Tuesday, Thursday, our man, Mr. Andy Heck, does an outstanding show right here at TFNN, 5 to 6 Eastern Standard Time. As soon as I get off, he also has a great newsletter. It's the Technomento Commodity Report. You can test drive that absolutely free by coming over to our website at TFNN. Now, as you come over, what you're going to see is you're going to see a great surprise right on the front page. Now, we've had it up there for a week, so some of you have seen it, but we've been talking a lot about commodities. This course that Andy's going to be doing is a phenomenal course, folks. It's the 12 Essential Lessons for Trading Commodities. This is going to be done, it's going to be a 12-part course. It's going to be done over 4 120-minute sessions. The first session is going to be on May 5th from 5:30 to 7:30. Second session is going to be May 18th, 5:30 to 7:30. June 1st, 5:30 to 7:30, and June 15th, 5:30 to 7:30. If you want to know technically and fundamentally how commodity markets work, folks, this is the course you want to go to. The course is only $595 for all those lessons. They'll be archived on your website for 1 full year. If you happen to be a subscriber to the Technomento Commodity Report, you'll get an additional 10% off the $595. And what you have as you're over at TFNN, folks, bottom line is that if you'd like to get more off, guess what? You have from now until this coming Monday to get the Tiger Dollar sale, where you can make an additional 20, 30, or 40% on your money. You can check it out on the front page of TFNN. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
I'm doing great. Lots of action in the markets.
There's no doubt, man.
So let's start out with gold and precious metals.
Cool.
All right, so gold, kind of a flat day, but good action, good volume, creeping higher, coming back, trading in the middle of the range. The real important markets, silver. Silver today took out the recent high.
About time. I love it. I know.
Right? Silver, 1637 is the big number. I think 1638 gets you 1775.
Yeah, no,
Real quick.
listen, I like what it did, man. And you may not heard me. I can't wait to see what will happen, folks. Is that we'll get I'll get these in probably the next 20 or 30 minutes about the SLV and the GLD, about have they gone in the market to buy the physical.
Right.
And that's, if they didn't, it would even be better. It would be hilarious, because that means they'd have to. I suspect silver definitely has to, because it's up almost $1 in 2 days. So
Right.
know.
Now, also platinum, the creeper,
Yeah, the
up
creeper.
over 1,000, looking like the big level there, 1022. We get above 1022, man, we could do a $100 moonshot in that thing.
Yeah, which would make sense, right?
Right.
Yeah.
Listen, the platinum gold spread, the silver gold ratio has been screaming that these things are too cheap. I think these things are on the edge here, and they could get very interesting. Now, are they going to fail again here? Who knows? But, right, I like the action. The action is really, really positive in them. So keep your eyes on those commodities. The other big thing I wanted to point out today, I posted an article I wrote midweek. I put it out, just came out on Seeking Alpha a few hours ago.
Okay.
It's called Glencore Selling the Lows in Agriculture.
Yeah.
So let's talk about Glencore. Big commodity company. They hit the skids last year. Lots of debt after that Estrada merger.
Sure.
They've had to cut expenses and cut their debt. And how do you cut your debt? You sell assets.
Right.
So so in 2012, they bought this grain handling company called Viterra.
Okay.
They paid like, I think 4.6 billion for it.
Yes.
It's in my article. That was in 2012. Now we know where grain prices were in 2012. Soybeans were almost $18 a bushel. Corn was $8.50. Wheat was $9.50. And today, you got corn at, three and change, $3.50, $3.60. You
Yep.
got soybeans at $9.30, $9.20s. Wheat down at $4.60, $4.50. Well, they turned around. They sold 40% of their agricultural business here.
Yes.
To the Canadian Pension Fund. So here's a company, commodities trading company, that bought the highs. And now I think what we're seeing them sell a big piece of their agribusiness at the lows. I think this is a signal. A lot of times these things happen and they give you a signal in markets.
Well, listen, I'll show you, and this is so cool, folks, okay? I had already brought this up. I think you know this, Andy, is that inside the gold market, right? And this is sad when this happens, folks, okay? But John Paulson, I've watched him forever, okay? Because I watch all these people that really are moving markets,
Right.
especially gold. He sold the low.
Right.
He sold, he sold 3.4 million shares inside the GLD in December.
Right. And let's go back to 1999 and the low in gold at 285.
Yeah.
And the British
Bank of England,
government
right.
sold half their reserves
I
at
know.
that price.
It's pretty sick.
And the Chancellor of the Exchequer at the time was Gordon Brown, who, to get him away from the checkbook, they made him the Prime Minister.
Isn't that crazy? I know. It's sick. Seriously, man. I know.
But anyway, going back to soybeans here. Soybeans today broke out to the upside. I mean, we got up to like 937. Resistance was at 929. We closed at 936 and a quarter, up 8 cents. That's a breakout in the soybean market, which has been well supported by the products. And, this is one of the things that leads back to the course that I'm going to teach. The way to look at these commodity markets. Here's a classic example of a processing situation where the processed products of the commodity signal the strength in the commodity. And I'll go into that in detail in the course, in that course in one of the sections.
Yes.
But here was a perfect example of how soybean oil told us that soybeans are supported. And
cool is
soybeans
that?
broke out today. So very interesting action there. I think great action, by the way, in copper today, Tom.
Yeah.
Copper got down and tested. It broke out from 214.
Yep.
And it kind of went to 232, 233 in a straight line, pretty much. and it kind of hung around up there, but it never tested the breakout level. Now we've come back, we've tested the breakout level, and today we had liftoff. You know, we're back a little bit above there. We're up about 6 cents.
Copper can go to 230 right now in a heartbeat, man.
Absolutely. Actually, I think it'll make a higher high. If silver and platinum are for real here, copper could be for real too. And the other thing is the dollar. Watch that 93.5 level on the June dollar index. That is the key support. That was the August 24th lows. If you remember, that was the day that the Chinese shocked the market by announcing a devaluation of the yuan. So, you know, that's a key level. And if the dollar breaks down through 93.5, Tom, you know, these commodities could be off to the races.
Oh, yeah, listen, I guess on the continuous contract, I get 92.5 there, but I'm with you there, man.
I'm looking at the June. When we get back, we can talk about oil.
Absolutely, man. You stay right there, folks. Andy and I are coming right back. And, of course, at the break, folks, you can come over to our website at TFNN. You can check out the Tiger Dollar Sale. Check out Andy's course. It's going to be an amazing course, folks. 12 essential lessons for trading commodities. This is Andy Heck, Tom O'Brien. You stay right there. We'll come right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got our man, Mr. Andy Heck, and we are talking commodities. And right in between that, let's go just take a look at CSX. CSX closed. This is the big train corporation, folks, transportation corporation. They closed at $24.99, trading at $24.99, and numbers go like this. So the estimate was the income gross, it was $707 million. They took in $704. Earnings per share, 37.37. So bottom line, they came in what they thought they would come in with, and the stock's trading at the same price. So oil. Let's talk oil, huh?
Let's talk oil. So Sunday,
talk oil, baby.
Sunday, April 17th, the big day.
Yeah.
All right, so I got a couple of comments to make about oil here. Oil's done exactly what I thought it would do. I thought it would rally into this OPEC Russian gathering.
Right.
I've been writing a lot about that.
Yeah.
The Brent spread has gone out to $1.25 premium to the WTI spread, because remember, what OPEC decides is really their policy for Brent, because that's the benchmark for the Middle Eastern crude.
Yep.
Now, I'm going to say, so take a leap of faith here. I really believe that there's an agreement. I think that this this thing Sunday is kind of a formality. I think that the Russians have worked behind the scenes, front man for Iran, with the Saudis, with the Kuwaitis, with all the others, to put something together that's going to make the oil price go higher, whether it's a freeze or a small production cut, you know. Or both of those are positive for the price.
Enough to get it up to $50 or something, probably. Yeah.
And let me tell you, there's no insider trading rules when it comes to the Russians, the Saudis, the Kuwaitis, and I think they're buying oil.
Yeah,
I think they're specking and buying oil going into this meeting.
What a great position to be in, right? You run.
Absolutely.
Well, no, so picture this anyway, folks. Okay, they are the government in both cases. So great. Okay, buy contracts. You already know what the deal's going to be.
Exactly, and I think that's what we're seeing here, and I think we're going to see follow through. I think we're going to see a new high above 43. And I think we're heading towards 50 here. I think it looks very, very positive. And I think it's good news, you know, short term for the stock market, which will take this positively. But
well, when this bid came in this morning, folks, okay, it came in at 10:40 Eastern Standard Time. 15,000 contracts went across in our markets, you know, and that lit the match in the whole market, you know.
Right.
So.
I wonder if that was the Kuwaiti or the Saudi sovereign wealth fund.
Exactly.
Well, maybe it was the Russians.
I mean, what a way to go, right? I mean,
it's a beautiful thing. You know what's going to happen. I mean, come on.
Seriously, man.
Listen. You also have API numbers and EIA numbers coming out.
Oh, I know.
And you know what? These rig counts are down. You're going to start seeing U.S. production fall. It's going to fall below 9 million barrels a day. Yeah. This is positive. This is what the Saudis have been waiting for.
We're coming into driving season, right? I mean,
absolutely.
Coming into summer.
Prices, and that's going to support corn. You know why? Because ethanol is going to go up, and that's going to make corn inventories go down. And by the way, Tom, because of this move in beans, the corn-soybean ratio has popped up to 2.55 to 1, which means you're going to see some late-season switching by farmers over to planting soybeans in lieu of corn, which will make the forecast for the corn crop go down, which will support corn.
Interesting, man.
It's a giant puzzle, you know. Let's switch. Let's talk a minute about.
You know what I saw out here today? So, is that, you know, you talk about corporate welfare. Well, the agricultural community, the farmers this year, this is going to be the biggest checks they've got in 10 years. That 25% of their profits are going to be coming from the U.S. government.
Absolutely.
Pretty wild, man.
Absolutely. Well, we got to feed ourselves and the world, and that's why those subsidies are in place, I guess.
Yeah.
But the interesting thing is that it's corporate welfare, because they're not paying the small farmers. Small farmers, they put out of business.
Do you know what blows my mind? And, you know, what blows my mind, folks, I'm not kidding, is that, you know, you hear these arguments on a continual basis that so-and-so got this and so-and-so got this. Please wrap your head around corporate welfare. Because corporate welfare, they got so many people bamboozled that, you know, whether a mother's getting something for their children, whether a city's getting something, corporate welfare is where all the bread goes, man. I mean, it's so sick.
You're sounding like you're feeling the burn.
I've always thought that knowing the difference, you know, is insane.
By the way, there's a reason why that guy won 8 states in a row from Hillary Clinton.
Yeah.
There's a reason.
There's no doubt.
There's no question. There's no question.
You know,
no question.
Okay, go ahead.
Let's take a look at natural gas here quickly, because that's an interesting one. This thing is really struggling with
And so natural gas, so folks, tomorrow at 10:30, we get the oil supply numbers. Thursday at 10:30, we're going to have the natural gas supply numbers. So
Right.
it's really cool action, man.
Right, it's great action. And you know what? With natural gas, you're in a war. You're in a war between fundamentals and technicals. It's like an epic battle here at $2.
An epic battle.
Fundamentals, you got more, you got like 70% more gas this year than last year. That's bearish with a capital B, right? You got reserves that are enormous. Fundamentals are clearly bearish in that gas. However, on the technical side, you got open interest at 1.122 million, the highest since 2014.
Okay.
The market's loaded up with shorts. And there's nothing that ignites a commodity, you know this, like a short covering rally.
Yeah, right.
And so you got all these. You got not only the trend following shorts, but you got the fundamental shorts in the market. They're all sitting there pretty. They got big positions. Volume is big every day, and this thing cannot get above $2. 207.40 key number. I'd say about 210. We're going to try to see the market wash these shorts out of the market after the EIA numbers. The problem is every time it ticks up, they go shorter.
Yeah. No, listen, man. I can see this baby, getting into the 216 and taking it out and getting up to it's 216 to 233, man. I mean, it's pushing in here with volume, so.
Yes. And volatility's picking up. The daily ranges in natural gas are picking up. You had a 10% range today, right?
I know, that's sick.
And basically, I'm sorry, 10%, 5% range.
Yeah,
today.
but even 5%, folks, in the gas market is like insanity,
right.
man.
It's a lot of money. It's a lot of bread.
It's huge.
It's a lot of juice.
It's a lot of
But you got historical volatility, daily historical volatility, Tom, at 50%, which means it's too expensive to trade this market with options. They're very expensive here.
Yeah.
But I am bullish on volatility. I've seen volatility in natural gas go to 130%.
Okay.
Yep.
Listen,
the price range since they introduced this contract, I think it was in 1990 or 1991, has been $1 to $15.
Wow.
I mean, we're
That's
sitting
sick.
at $2. I'm not. Listen, the fundamentals have changed. There's a lot more gas around today than there has been ever.
Sure.
In the United States. I mean, there's a quadrillion. I don't even know. I can't even visualize that number.
I know, man.
Quadrillion cubic feet.
Have to love it.
And it's a lot. But, this is an epic battle, and it's going to, the one thing I will tell everyone about natural gas likes to burn everyone.
Yeah.
It likes to hand out more pain than any commodity
no pun included,
I've ever
right?
traded.
No pun included.
No pun included.
Listen, folks, you stay there because Andy's going to be coming up 5 to 6. And remember, just right on your cell phone, TFNN.com, hit the Tiger TV. And, of course, don't forget about Andy's outstanding course, the 12 Essential Lessons for Trading Commodities. Hey, Andy, have a great one, a safe one. Look forward to the show in 20 minutes.
Thanks so much, Tom.
Thanks, man. Bye-bye. Come right back, folks. Stay right there.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So we had the Dow Industrials finish up 164. You had the Nasdaq up 38. S&Ps were up 19.5. If we go over to the oil, as Andy and I were just talking, caught the bid. You're coming into a swing, and you're coming in with some real nice volume, folks. I expect what you're going to have here is that once to break the swing, you have the volume behind the move. What we did out here today, we did 750,000 contracts. You're coming into 672,000 contracts. And we're already into the bar. The bar that we're talking about was the March 18th swing high. That March 18th swing high, the high itself is $42.49. Now you break that baby, and it looks to me that next stop is 47. And if let me just look at it this way. So if I do an ABC structure on it, you get $30. It's a big one. $12. $12. That's $37. So the C point is 35, 40, $47. 47 is A to B equals C to D. And 47 could make sense, too, because 47, let me pull this back a little bit more. I'll do a continuous contract on the CL1. So if we do a continuous contract, $47. That's interesting. So the swing point, the next swing point is actually at $50. The bottom of that swing is at 45. But so 47's game. 47's. There's going to be a lot of flack actually inside the oil market from $44 on. We traded January of 2014. That's the first time of 2015 rather. That's the first time that we hit into that for years in the 44 mark. And we go from January of 2015 to August of 2015, kind of at that level. So that's the supply line we'll be trying to get through. Now, that being said, if it eats through that supply line, it would take months. But if it ate through that supply line and got up into $58 or $60, then they'd have a real shot to get this up and dramatically higher. If we go back and take a look at this dollar, the dollar is going to be the number, folks, okay? Because if I put the dollar in a continuous contract, what you're going to see is this. The dollar has been on a one-way track. The last high in the last 6 months was December. That was at $1, 100, right? Right now we're at 94.03. The 94.03 on this continuous contract took out the lows that were established in last October. What's sticking out like a sore thumb now is that August 24th level. So on the continuous contract, that is at 92.52. And, you know, we're right basically there. You break that, and oh man, then you're talking $88. And $88, a 4-cent move down like that, that would, you know, that would put some real firepower under the commodity market. And, you know, each and every, whether you look at the equities, whether you look at the actual hard commodities or the soft commodities, they're looking good. They're bottom line, they're breaking, they're going higher with wide price spread accelerated volume. They're breaking swing points with volume. That's real buying that's coming in that commodity, folks, and the equities that are associated with the commodities, you know. So we'll see where this takes us. But if I go back over to that XLE and you take a look at that correlation, the correlation is pretty clean. The XLE come into its swing point today with 26.7 million shares, and the swing point has 28 million shares, and it's going to go after it tomorrow morning. Well, actually, did $64.27, and we're at 63.96. So it's going to go after it tomorrow morning, and what very well could happen. And this will be interesting to see if this happens before the API numbers come out, because you have the API numbers at 10:30. Does it jump the creek and just make the run, and you know, before the numbers come out? So it's a 10:30 deal. When those numbers are going to come out. Now, let's go over to J.P. Morgan, because the financials, you know, hadn't caught a bid. And J.P. Morgan is going to be the first big bank tomorrow morning. They're coming out with numbers. They're coming out with numbers, I believe, at 6:45 a.m. Yeah, 6:45 Eastern Standard Time. So, J.P. Morgan, we're at $59. You're pushing with volume. You have a swing high with volume at $60.97. On a counter-trend bounce, this is saying that, guess what? That's where we're going. If the financials end up catching a bid with the commodities catching a bid, you know, you're going to see that S&P up to these levels pretty quickly, meaning the ABC structure we've been talking about for quite a while, that 2087 price point. That coupled with the option expiration coming on Friday have the makings, folks, that you get volume in the marketplace, you get the price spread in the marketplace to get this market not only up into the highs, but probably spike the highs. And then when we take a look at the time frame, what are we dealing with, the 12th today? Yeah, dealing with the 12th today. When you look at the time frame also, just about everything is basically set up here that it's going to wants to hit the highs. The real question is, do you spike the highs? You know, the force is still downtown, but the most deviant thing the market could do would be to go up to the May highs of last year, spike the highs. And what a spike specifically is this. You just don't go over the highs, folks. What happens, the high in the SPY is 213.78. Most of the time, if you spike a high, because you will go dramatically over that, and intraday, you give it up. And that's basically a blow off top. That's how these things shake out. What you're going to want to be watching real closely is that you're going to be watching the trend, which right now, the trend was a 0.61 today, but the trend is still too high. You know, that trend will go down to about a 0.40 for 2 or 3 days in a row, and then you want to watch the tick, because what both of these are all about, you know, the tick today, oh, that's interesting, though. Oh, watch this, though. The tick was plus 1450. That's getting there. Oh, this is getting here. This is interesting, folks. So the tick is getting there. You know, you've had the greed come in the market pretty quickly the last 3 days. Look at this. You had a plus 1459, a plus 1417, and a plus 1450. Okay, so this is what you need. Thus far, what the tick means is this. The tick means fast buying come in. They're buying simultaneously on the offer, okay? The trend, this is what the difference is. The trend has to get lower because what the trend does is this. What the trend tells you about the marketplace is that as that gets to a lower price, everyone is buying the exact same stocks. And what ends up happening, they have no one to sell them to. It's just like anything that everyone's on one side of the boat. If everyone buys to sell it to someone else versus for cash flow, that's the end of a market. That trend, that's the one you want to watch. The arms, the arms, we have the tick going with us right now. That's big numbers on the tick. So the green is into the tick thus far. We'll wait for the arms, but I expect that is going to be up at the highs. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment, with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go over to Potash. One of the Tigers want to look at Potash. This is the Potash Corporation of Saskatchewan. The low of the year is $14.64. The high is $33.80. It's trading at $16.18. Okay, so the question is, where do you buy it? And the way this is trading right now, you could buy it right here. You know, you went to $15.54 today. You rejected lower price, and the lower price that we're talking about is this made a low on the 25th of January, and it was a high volume low. It went from, the low is $14.64. The high of that bar was $15.81. You had 23 million shares. So what do? You go into the high of the low today. You go as low as 15.54. You rejected the price, meaning you closed above that price, and you did half the amount of volume. We did 12 million shares today versus we did 12.3 million to be exact versus 23.7. That sets up, guess what? Can't bust them down, gonna bust them up. Now that's on the daily. We put this on the weekly. What you're gonna see on the weekly is this. And don't marry this thing, folks, okay? Bottom line is that it has not broken a swing point yet on the way up. This is a phosphate company that has got absolutely smoked, toasted, roasted, all of the above for years now, okay? This baby at one point traded at $80. It gets down to $14.64, but when it did do that, it was testing the lows of 2008, rejected it. Now what you have is that if we take a look at this on the weekly, it has shown some strength. You came off those lows with strength, and you have strength right up to $18, $19. So I like the trade. I like the trade to get up to that level. What you are going to have is you're going to have some big resistance at the $20 level. But guess what? Right now you're $16.18. So bottom line, I suspect that's a good setup. And particularly as the price of commodities go higher, guess what? These fertilizer companies, they put up the price of fertilizer ASAP. That's how that works, okay? They put them up very quickly because they know that, guess what? In the commodity market, folks, you blink and prices are either up or down. And people are people that are in that market know that ASAP, that you're going to get it when the getting's good. And, I suspect we're in planting season in the U.S. We're not necessarily in planting season in the whole world, but just in the U.S. alone, guess what? Those prices, more than likely, if they see these commodities generate higher price, which they have, and they have pretty dramatically, you're going to see that price structure go up, which will help POT. Let's go take a look at AGU. Andy's showing me AGU inside the den here. So this is up $1.38. This is also another phosphate company. Yeah, this is strong too. You know, this baby's at 89. That thing wants to run to, this had wide price spread today. This thing wants to run up to the $91 area. You know, so Mosaic, is that MOS? Mosaic, that was up 66 cents today. And that looks like potash. So Agrium, AGU is the strongest one out of that. But when you're looking at a little stock, yeah, this I like this setup too. Mosaic, I like that setup, man. You know, Mosaic has a couple high spikes. You get the spike at $29, and you're at $25.53, and you get the spike out there of $30, and both of them have a high volume spike. You know, so. Good scene. You stay right there, folks. I'm Mr. Andy Heck's going to be coming back with you, growling and prowling at you for the next hour. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning. Wow! Go get them, folks.